Hello, and today I'm going to share with you how to invest in the exchange traded fund called SOXX, and it's specifically focused on the semiconductor sector. Now, before we get started, I'm just going to disclaimer that this is educational purpose. It's not meant for investment or tax advice. So always consult your financial or investment advisor. And I'm going to walk you through the history and also historical performance and conclude by comparing it with the performance of other indexes in the US. Now, for those who are new, my name is Isaac Jonas. I started this YouTube channel under Streetwise Economics to share content on personal finance and investing, and I've been thoroughly enjoying this experience. I am a trained economist by profession, and I also am a retail investor, particularly in the US and Canadian stock exchanges. This particular ETF with the ticker name SOXX is traded in the Nasdaq and in the United States, and it tracks the NSY Semiconductor Index that is focused on the semiconductor sector in the US. So, this ETF is managed by BlackRock, which is one of the top funds in the world, and it has over 10 billion assets under management, and it was formed in 2001. So this has very high volumes, even per day. Over 1 million shares are traded for this, so it is highly liquid, which is very key. But essentially, it seeks to expose investors to United States companies that design, manufacture, and distribute semiconductors. So it targets specifically the domestic semiconductor stocks. And as of recording, 18 January, it had about 30 holdings. So it means you will be having, about 30 stocks in this particular category. Then moving on, in terms of the holders, specific holdings of this exchange traded fund, you find that it has the biggest weighting on advanced micro devices. So it is about 10%, and Broadcom. So you find out that you will be exposed to this semiconductor sector, right? So these are the sector compositions you can see here, right? And these are just the top holders, but it has about 0.35% fees, which is higher than that for the S&P 500 index, like ETF, SPY, and also even QQQ that I discussed about in the previous videos, which is 0.20%. So this one is higher fees, but when you look at the performance over the past 10 years, it has done fantastically well. You find out that if you look at the 10-year performance, it has returned about 24% compared to the benchmark in that semiconductor sector, right? About which returned about 25%. So it closely mimics that index. So it's really good. And when you look at the all-time since inception, when it was started, it has returned an average of 11%, which beats the S&P 500 if you look at the average over the past years from 2001 when you average it out. And in conclusion, you can see that this ETF is actually interesting in the sense that it exclusively focuses on the semiconductor sector, and this is a sector that we are talking of chips, very interesting sector, because if you are talking about artificial intelligence and other computers and this other technology, this is one of the ETFs that could possibly expose you to that particular sector. But of course, you must always consider the risks, and this is not investment advice, but I thought I would just share with you my insights on this. And on part 2, I'm going to share with you how I buy this ETF. Thank you, and consider subscribing so that you can get alerts when I post some videos in the future. Thank you, and have a great day.